Hey, Dustin Tibbetts here with Passport to Wall Street. Today we're talking about breakouts. What are the best breakouts to buy? Now, if you're not familiar with breakouts, that's just a point where a stock moves above a series of equal highs. We'll draw them for you here on the charts, but we're trying to figure out, does one work better than another? Whether you're buying for a couple week trade or you're day trading on a 5-minute chart or something, does one make one better than the other? So first of all, we know that a breakout has a series of these equal highs. And a great example is our stock pick of the week last week, Ulta Salons, if you want to check that out. Now, when a stock moves above equal highs here, the first time it does it, you tend to get people that want to buy that. The technical traders love that moment in time. However, what's happening before the breakout tells an even better story. So let's take a look at two different breakouts here. The first would be just a stock that's moving along, and all of a sudden it starts holding near some highs here. And it just goes sideways for a while. We don't know when it's going to break out, but we know that it's on our watch list. Of course, we do want it to break out. And so a good example, of course, is Ulta Salons. Okay, same thing. When this does break out, it should grab some attention. But it doesn't really tell us much. If you look at that stock chart, it's kind of all over the place when it comes to these lows. There's a recent low that went like this. And so we recognize that as, of course, some temporary selling met with buyers that were very excited to buy it. So it's good news, but we really don't have a good, clean story. The most ideal breakout that you could look at here would be a stock that showed you something like this. It moved to some point, and then it started moving sideways, but you notice this happens, right? Where the drops, right? Every time it sells off, the sellers are not putting as much pressure on the stock as the time before, and the time before, and the time before. So what's happening is everyone that wants out has decided that they're gone, right? They've already made their exit, and that's the best type of breakout because here we had to move higher, then that sell-off, people got out of the stock. It started to rally back. The next time it fell, those that didn't make their exit, they made their exit there. The next time it rallied and fell, all of these people that have yet to get out of the stock, they did it. And then as you get to this point and this point, you start to have people going, well, it's not so bad now. Maybe I'll stay. Maybe I won't sell. You also have the people that have, of course, taken their exit. And so when the stock finally crosses above here, you get that much more excitement because we know that the sellers have largely left the building. They're not interested in selling now. We've convinced most people to stay, and then you get that breakout there. So really, really cool how that happens. If that's something that you happen to pay attention to, you can notice that those breakouts are stronger. Let's take it one step further here. When you have these breakouts and it's really wild in the beginning, and then it calms down and stays right there. That's letting you know that all of that fear, everything that was happening, is gone. It's similar to the last one, right? So we may have to wait a little bit for this thing to finally break out, but we know that the sellers are all but gone. And the buyers, the technical traders that come along and want to buy that breakout, it's the same concept. They're more excited. There's less risk because they can put their stop loss right here versus right here, which means they can buy more shares, which causes a bigger move because now you've got more shares going into the stock. So when you look at breakouts, they're not all created the same. We want that tightening up as we get closer to the breakout, something I think you'll enjoy, whether you're day trading, swing trading, or investing. So it doesn't matter the time period that you're looking at. I hope you enjoy.